Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. Interest rates are heading down, which will help companies that carry significant debt on their respective balance sheets. The Federal Reserve has begun cutting the rates, and this will extend into 2025. And we here at Income Investors think lender like Sixth Street Specialty Lending Inc., traded on New York Stock Exchange under symbol TSLX, will benefit from the lower interest rate as other companies ramp up their rate of borrowing. John?
Yeah, thanks, Mo. This specialty finance company lends and invests in middle market companies, which I think is a sweet spot for growth. Companies use the funds to drive organic growth, acquisitions, market or product expansion, and recapitalization. At the end of September, Sixth Street Specialty had 98.8% of its debt investments generating interest at floating rates. Interest income is used, of course, to pay out dividends. At the end of September, Sixth Street Specialty Lending's portfolio was valued at $3.44 billion. And the company was invested in 1,121 portfolio companies. That's up from 1,052 portfolio companies a year earlier.
Well, what's going on with the stock price?
The price chart shows TSLX stock trading in a relatively narrow channel between $19.50 and $22.35 over the past year, currently hovering at $20.48 per share. TSLX stock is just below its 50-day moving average of $20.49 per share, and its 200-day moving average of $20.38 per share. With the 50-day moving average above its 200-day moving average, TSLX stock is in a golden cross formation, which is a bullish technical indicator when the 50-day moving average is above the 200-day moving average. Next up for technical traders is the $24.74 record high that the stock achieved back in November 2021.
It reported a third quarter beat.
The company refers to revenues as a total investment income. Now, Sixth Street Specialty Lending grew total investment income 66.4% from 2019 to the record $421.1 million in 2023. Now, Sixth Street's total investment income experienced growth in 3 of the last 4 years, including a stellar 36.6% growth in 2023. It grew at a nice compound annual growth rate of 14.2% during this time period. Going back to 2014, total investment income grew in 9 of the 10 years, with the exception of 2019. Most recently, noted for the third quarter, the company's total investment income was $119.2 million, which was up from $114.4 million in the same period in 2023. For the 3 quarters of 2024, or year to date, Sixth Street Specialty reported strong year-over-year growth of 12.6% at $358.8 million. The total investment income growth rate is expected to slow compared to 2023. Analysts estimate that Sixth Street will report slightly higher total investment income of $476.4 million this year, followed by a decline to $453.4 million in 2025.
How about its profitability?
Its bottom line results are presented as net investment income. This metric has been consistently profitable by growth in 3 of the last 4 years. In the third quarter, Sixth Street saw a net investment income of 59 cents per share, or 2 cents above consensus. According to the company, the results continue to be impacted by the higher interest rates. Now, a key risk for Sixth Street Specialty is the $1.87 billion in total debt and weak working capital at the end of September. While the debt will need to be monitored, I don't really see any immediate issues at this time. The company's net investment income is easily covered total interest.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for a free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. And John, what about the dividend? I see that it has been on an 11-year streak.
Yeah, TSLX's stock's current forward yield of 10% is above the 5-year average yield of 7.38%. While the higher yield is due to the share price weakness, Sixth Street's dividends have been consistent at these levels for a few years now. Over the past year, to the September payment of 46 cents per share, Sixth Street Specialty Lending paid out $2.11 per share in dividends. The company's dividend includes the base quarterly dividend and a smaller dividend paid out roughly 2 weeks before that. For example, the company paid 6 cents per share in dividends on August 30th, followed by 46 cents per share on September 16th. Similar payments were also made in May and June, February and March, and November and December of 2023. Sixth Street Specialty recently announced a base dividend of 46 cents per share, be paid out on December 16th, followed by a third quarter supplemental dividend of 5 cents per share, payable on December 20th. The supplemental dividend is not set, so it fluctuates over time.
John, thank you so much for your insights. TSLX stock is ideal for income investors who desire a steady dividend and above average dividend yield. The stock has a relatively narrow trading range, so the dividend yield should remain at the higher end as long as dividend stays around the same level. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.